So, good segue onto market trends and opportunities this week. Now we've got the FTSE, Aussie CAD, UK Brent, and of course gold, which I've added a couple of little bits into, but ultimately look very similar to last week. Now the UK FTSE, starting from the top left up here, is in a relatively decent range. We are going to be awaiting to see if the range ceiling gets broken or not. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now session, where we break down this week's market report. Good afternoon to you, Coratim. Good to see you, man, and good evening to you, Matthew. Welcome into a new trading week, ladies and gents. As we may or may not end up seeing more data delays from the US. Hopefully not, as this week is, of course, as you may have seen already, the big CPI week for the United States. Of course, we are having a complete and utter disruption at the moment from our US team members over there due to the government shutdown, so we are going to have to wait and see how that pans out. There's no guarantees at the moment that that data is indeed actually going to be released to us when it says it is, but as it stands currently, as of this morning at least, 8 a.m., it was. I haven't checked it again since then, but I am watching it. I actually made a slight, very, 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 very slight little change to the report just to highlight the government shutdown and that the data we are looking at is ultimately, tentatively being released. So, anyway, let's get cracking on. First of all, natural gas. Currently trading at now it's at around a 1 to 10.5 risk reward. Haven't moved the stops yet today. There's not really necessarily been the reason to. I do actually expect the gap to be somewhat filled before we get the continuation. But, man, what a gap up it was over the weekend. Really nice gap. As I mentioned on Friday, predominantly due to the week's weather forecast, looking at the cold snap, what we're really hoping for at the moment is for the forecast to be completely correct. If the forecast is saying, mega cold snap in the US and then we have, mild weather, then that's going to be pretty detrimental. We'll probably end up looking at an early cut of the position. But so far, everything's looking really good. The strategy's playing out really nicely on this one. Fundamentals and the technicals are aligning perfectly, so it's all going very well. Yeah, I know, Coratim. Yeah, that's fine. We're going to dig into the market analysis report. That's right, and get through that. I was just giving a short, brief highlight on natural gas, and we will, of course, get onto those charts after the report's done as well, so you guys can have a see for yourselves where we are. So, let's start from the top then, team. The week's trading exposure ultimately remained heavily weighted towards global indices, as I've noted down here. We had a 78% exposure rate on US indices last week. We only had one commodities position last week, which is natural gas, but it's showing zero because the position hasn't been closed. So that's why we had 0% in the commodities exposure last week. And the majority of them ranged throughout the majority of the week as well. We had gold, which continued to range all throughout the week. We had UK Brent, US crude, which just did nothing but range all throughout the week. We've had pretty explosive breakouts after this weekend. I might add, gold's currently trading up to 2.5%. We have silver trading upwards of 3.66% daily change at the moment. So we've got some pretty big explosive moves out of precious metals so far early on this week. Obviously, we don't know where that one's going to end up, but we'll have a view at those as well after the report's out of the way. And then FX last week took 22%. And the FX markets were very choppy, if you guys remember. So yeah, it was a pretty choppy momentum all throughout the week with FX. I think we had a couple of wins. We did have a good mixture of losses as well. Some pretty unfortunate as well. We got triggered, trades got triggered, and then ultimately went to their target profits thereafter. It was pretty annoying, but it is what it is. So we moved down then into the weekly return. It was steady, but very, very minimal gains. So we had a big update on the Monday, and we had almost an equally sized down day on the Tuesday. And then that was followed by consistent gains throughout Wednesday, Thursday, and Friday, leading to a net realized return of 2.7%. So nothing to, get the fireworks out for, but it is consistent. It is positive. It's in the green. So that's all we really care about at the end of the day. So moving down here into portfolio metrics, we are currently situated at 143.68% on the year. 2.6% risk reward over the total portfolio, 12.8, 3.2. None of those changed, by the way. Only obviously the yearly return, but none of the other metrics changed. They all are as they were last week. And then we finally get November on the board of the trading volume. So November has gotten off to a very short start. No pun intended. We've got a real increase in sales versus longs. We've had pretty much last month, there was only about 3 or 4 trades in it. And the difference, a month before that, in September, there was only a couple of trades in it, really, maybe 4 trades. Same as October. So no real noticeable call out there. But November, we shorted a lot more than we ended up buying. So it'll be interesting to see if that trend continues. And then finally, we go down here and compare funds. We got UTCF at 2.7%. The S&P lost 3.7% and the UK FTSE lost 2.27% as well. All predominantly as a result of the new increase in level and fear over AI bubbles and certain geopolitical factors. So, good segue onto market trends and opportunities this week. Now we've got the FTSE, Aussie CAD, UK Brent, and of course gold, which I've added a couple of little bits into, but ultimately look very similar to last week. Now the UK FTSE, starting from the top left up here, is in a relatively decent range. We are going to be awaiting to see if the range ceiling gets broken or not. My bias is no matter which way it goes, it's going down first. So even if it does end up breaking the range ceiling, it's not going to be before we hit that ceiling and then come down to the lows to test out this level in here before we get the continuation. So that my bias is pretty strong with that one. So it's going to be an interesting one. We will probably end up taking that in the midst of a European session and work our way out from there. And as for the AC's actually gotten off to a very strong start this week. It's currently at a 0.34% daily change, so it's nothing to shout home about at the moment, but we did open up quite nicely and we have continuously ground our way up into liquidity. So it is, at this stage, ready for a pending order. So for those of you out there who are looking to actively trade the market report trading opportunities, maybe I would say probably quite a few of you out there on YouTube. Hello there to you guys as well. You want to be kind of looking out for that one. But remember, please, it's either demo or minimal risk sizing. We are talking 0.2s, 0.25s at maximum on these orders. We are not betting the shed on it. Okay. But it is looking pretty good at the moment. I would say it's been a really nice range to us in the past. We've got lots of back-to-back wins. We did take an unfortunate position last week. We got a break of structure opportunity and it went straight back out again, and it did knock us out. This time it might be the same. We could have another one of those. So let's just see where it goes. But the pending order for that one is ready to rock and roll. Sipping my coffee, guys. Excuse me. So moving down then into UK Brent. We've got equal trading margins on both sides of the market. Decent break of structure in the middle here for a move back down to the previous low, which looks really good. Or we've got the rejection from the median back up to the previous high. And then ultimately, no matter which one is achieved, I am looking for that median being hit thereafter. I don't believe that we're going to see both stage of this wave in a single trading week, but what I would like to think is we either get the buyback and we can profit on that one, we can get the sell-off and profit on that one, and then in the following week we'll be able to look to do the reverse. And then finally, we've got gold. Now, gold was at the time of posting this trading in the middle of these two margins, but if we actually have a look over at gold, and I will show you guys, of course, in a moment, we've already got a nice big break of structure above the zone that it was trading in last week. Really nice big explosive breakout. We do have a little intraday price action pullback. It's not really the kind of retest that I was ideally looking for. So I don't feel at this stage like we've missed the boat or anything like that. I am expecting there to be a bit more of a price action pullback into liquidity before we get on our way to the upside. But at the moment we're trading probably at about here. I want that price action retest to come back down, and then we can look to get involved in gold. Obviously, I've jotted down a great number of my thoughts here, a great deal more to consider. Please feel free to download and go in and have a good read for yourselves. Now, my minor changes that I mentioned, basically what I've done is I've been real high tech and I've added a red outline. And what this red outline indicates is these three indicators on the market report need to be taken with a pinch of salt. Not a pinch of salt in terms of the quality of the level of data that it's providing, but more so the fact that we may not even see this news. So this, and this might be completely irrelevant this week. We don't know yet, but that's what that's what it represents. So this may not even come to market this week. We may not see any of these market challenges at all. But let's proceed on the basis that we will. So we've got core inflation, we've got base inflation, we've got United States PPI. These are the three main economic events taking place this week that are going to be really shaping market sentiment. Now, core inflation is coming out at an 8 out of 10. We've got US inflation, base inflation at 7 out of 10, with the United States PPI at a 3 out of 10. And this is directly relevant to the 4 trading opportunities that we have going on above. Moving down into the state structure volatility index, we have, I would say, a couple of notable callouts. The main one, UK FTSE at 60.37%, I think is pretty extreme. So that's an interesting one. And the other one is the Aussie CAD. The Aussie CAD is showing at 35% long, which is 65% of the market short in the AC. That seems like a pretty decent indicator for shorts at the moment, and considering of our technical bias in this one as well, seems to go hand in hand with it. It seems to really, play quite nicely to that. So fingers crossed on the AC short, because I think that one looks quite nice. Obviously, we're looking short the UK FTSE 2 from a technical perspective, but as I've mentioned quite frequently in the past, the indicator here will measure limit and pending order types as well. So if we got a shed load of the market long, but it's not long until we reach, 5 or 6% southwards of wherever we are right now, then clearly, shorts are still going to be underway and we're still going to be able to profit from that. And then it would be a great idea to consider longs from the lows, especially considering we have that 60.37% indicated there at the far left. So that could be really interesting for us, and so could the AC. The rest of everything though, 58% gold, 52.1% UK Brent, they're very in the mean, so I'm not really not really too concerned about those either or at the moment. And VIX at the moment has been at low levels for a really long time, and that's not expected to change. So moving down then into the economic and order book impact report. Now remember what I just said about the red outline. This is ultimately representative of the fact that we have US government situations going on at the moment there, which are causing huge delays in the data and the publication of those data sets to our markets and therefore to us. So we may not see this data whatsoever, but we are looking at core inflation at a 9 out of 10 in terms of impact to our markets this week. Base inflation is at a 7 out of 10. And then we've got the United States PPI registering as a 4 out of 10. So 3 major news events. Obviously, the core and base inflation is going to be at the same time. The United States PPI is going to be a day late. And then Moving down, we've got the multi-asset impact gauge. Again, FX market taking 50% of the brunt of this, but intraday trading, day trading opportunities in the stocks will be coming through thick and fast. So we have to be on the ball with those as well, so long as we do indeed get that data. So I think, look, if the government shutdown and the geopolitics don't get in the way, it could shape up to be a pretty decent week. If they do, then I wouldn't be expecting anything at all from this week. I really wouldn't. I think it'll be quite slow and quite frustrating. Excuse me. So we all need to keep our fingers crossed for a good week of volatility. Now, what else have we got going on? There's nothing there. Nothing's changed whatsoever on that one. Equities in focus. Got you a whole new collection. We've got ITM Power down here as well. It stands out at the intersection of two critical macro narratives, one being the energy transition and European green infrastructure investment, which is coming around now. And we've also got renewed capital flows into renewables and hydrogen tech after last month's correction. And I don't know if you guys realize, but we were seeing week on week huge capital inflows on the left hand indicator, this one over here, right? And this was showing us week on week $1 billion inflows over the weekend in tech. Well, actually, that was very much predominantly to do with this, which is really interesting. So that's an awesome buying opportunity at the moment. So definitely, please, if you're into your equities, go and check that one out. And then as far as the institutional buying interest by sector indicator goes, energy markets, no coincidence here, I doubt, is coming up at number one. We've had $3.2 billion over the weekend into energy. Tech is at 2.8 at second place. Financials at 1.9 at third. And health at $1.4 billion capital inflow. So that's it, ladies and gents, for the market report. Now, please, if you are not a member already, really do come and join us. It's completely free. There's no strings attached. You can come, join in the community, and download your own copy of this market report for free. And then you can also get stuck into the trading opportunities. We dissect them throughout the week. I mean, the natural gas one, obviously, we're currently trading at a 1 to 10.5 risk reward. It was a 1 to 12 earlier, and we're still managing that one out. And that was from a market report. That was not from a private UTC trader session. That was from a market report trading opportunity, either last week or the week before. So that one obviously going very well. But for those of you who perhaps have not done this already, give it a go. It really is no skin off your teeth, and it's no skin off ours. We'd love to have you. Now, for the disclaimer, the information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Please feel free to go and read the full thing as well. It's on every single copy of the market report, so do your due diligence. Now, let's get going. Let's have a look at the charts this afternoon. Get ready for our US Open. And we will also, of course, touch base on the natural gas trading opportunity that we're currently all in at the moment and have wonder eyes for. I certainly do. It's going so well. So let's start out with natural gas then, first of all. So natural gas at the moment, it is doing well to come back down and close the gap. So that's not a concern. That's a natural reaction. That's what happens, generally speaking. And as soon as the market comes down and fills these gaps, or the most part of it, we then get the next leg up of the move, the continuation. So at the moment, we're well within trend parameters. There's nothing to be alarmed about here if we just sort of put a rough trend in place. That's the trend at the moment. Like I say, really nicely within the trend parameters. There's nothing to be alarmed at here. Expect the market to come down to either 393 or down to around this point of liquidity down here at around 385 before then continuing to trade to the upside. Stop loss is locked in at 3.6. There's nothing more to really mention about this one. The next point in which we move our stops, you will be the first to know, of course, as is always the case. Yeah, we're doing really well. I mean, we're doing really, really well. When I woke up this morning, I must admit, it was looking extraordinarily exciting. We're at a 1 to 11.2. which was absolutely fabulous. Really happy with that one. We are currently at, will be even less than a 1 to 10.5 now, at a 1 to 9.5, which is certainly pretty good. I'm definitely quite happy with that as it is. The worst case scenario, I think we're going to let it go all the way back down to around here before having some serious considerations as to what to do next. And that's going to leave us at a 1 to 6.5, which will be the year's trade regardless. So we've got lots of plans in place. Exit strategies are ironed out. We know exactly where we are and what we're doing with this one. And yeah, please just come along for the ride. Now moving over here to the precious metals. As I mentioned, gold's had a really nice breakout today. We did open up strong, had this big, nice push. It is coming down now. This is where I hope, or what I hope, is going to be the beginning of the price action retest of liquidity. See the market come back down to around 40.60 and then get the nice bullish continuation. We actually have a very strong level for a breaker structure entry point there as well, which is about there. You do have an even more aggressive one on the bottom side, but I would be a bit concerned about taking one there just based on where the retest comes down to. The retest hasn't officially been, it's not taken place yet, so we need to let that stage happen and then we can be reactive to that. But at the moment, this would be my sort of point of call to access a gold long, and then the gold long we would have running up until the 443.55 point. So we'd be looking for an entry about there, and then we'd be running the trade right up to around the previous highs, about here at 43.51ish. That's where I'd be looking at, and the stop loss would be sort of down. I'd say about there really. I wouldn't really edit it, so that would be around what we're looking at for the gold trade long. Now we will have some steam in the tank. We'll have a little bit of profit there, so the market starts to sort of falter as it comes up to this point at around 41.50. It will just be sort of, flapping around for a little while. If it ends up coming back down, we can look to get out for a break-even trade, maybe even a small win. Ultimately, though, we've got the room in the tank there to let it breathe, let it flex, let it do its thing without having any concern of it coming down and hitting our stop losses. So that would be the plan of attack for gold. As I mentioned, we can't actually do anything at this moment in time, but I would say give it another 24 hours. Let's see where the market lands tomorrow, and we can take it from there. Now, on to the US indices. So, what are we looking at this afternoon? US 30 Dow Jones actually at this stage seems to be forming what I believe is somewhat of a 15-minute channel. It's not perfect by any stretch of the imagination, but it's definitely tradable. Definitely tradable. So, if we have it, maybe somewhere around like this, the low is very nicely established, I must say, really nicely established. And if we can get a continuation, the breaker structure through this area, for example, would be really nice for a potential trend continuation short. Now, it doesn't take away from the daily trend. The daily trend at the moment is a very explosive move. We all studied this on Friday. If you haven't seen the Friday stream yet, I would highly recommend it. It's only like 15 minutes long, 20 minutes long, but it's a really good recap. We have a look at the AI boom cycles in the US indices, some of my thoughts about the current shape of AI and what that looks like, and how market sentiment's been sort of shaped by, and where we could go with it in the next sort of 6 months and so on. So definitely worth having a look at that. Ultimately, though, this US 30 Dow Jones, I think it's probably got a little bit more room to the downside. We've got this area in here. So as you can see, we're actually sort of bouncing off of it. I think, I don't know, guys. Looking at shorts today into this area, it is risky. It does come with some risk, absolutely. You know what I'm like. I don't hardly ever like trading inside points like this. The path of least resistance at this stage is certainly going to be more up than down, but I'm just trying to build in the fundamental bias as well, because it's so big, it's so extraordinary at the moment, that it's of course going to have more influence over my decisions than the technicals. So what to do? Ultimately, where do we go with that information? Well, I would stick to my guns. I would say break a structure below here, and then look to trade it. You know, we're not going to take any massive intraday trade. We're going to look at in and out trades, and I'd probably be looking to take it down to about there. So if we drag that back in time, that's going to be at the point of inflection here to the left-hand side, which is great. We drag that one across, and then you've got yourself a nice little trading margin. So let's delete this and get that out of our way. And then you've got the trading margin sat between there and there. And that's probably what I'd be looking at this afternoon for a Dow Jones short. It is a bit of a margin away from where we're trading currently. So there is that. And that's a shame. But again, we're on Monday. I'm not too fussed. I'm not in a rush here. So that would be the short that I'd be lining up for this afternoon's Dow. If you want to take a long, pretty straightforward. It's pretty clear stuff. This area in here. And then we'll be breaking the structure through there. And then we'd be looking at, I would say, about there. You're not getting greedy. You're not going up to the high here, there, or any of these ones. It probably will trade higher than that. But we want to be in and out of the market beforehand. We want to get those guaranteed results. If there is such a thing, which there isn't, but you know what I mean. So we want to go for the most highly probable outcome. Break a structure above here in the market. Probably looking at entry at around 47.24, 245-ish. Exiting the market at 47.323. Looking at a really strong risk-reward ratio. Maybe a 1 to 2.8, I would say, off the back of that. So that looks really nice as well. I mean, actually, I'll tell you what, team. Looking at this on a 1-minute chart, it's kind of changing the shape for me a bit. Especially we got this 1, 2, 3 down at the lows here as well. I mean, could we not turn that into a trading opportunity? So long as we're trading inside, you see this dotted line coming down here. That's the upper limit of the bearish channel that we're in at the moment. And I don't want to be taking a short anywhere. I don't want to be taking a short anywhere above that. So it would have to be below. We've got a TRF at around 47.126. Not too concerned about that one. To be fair, I think that's just a decent break of structure for a long. But I'm thinking of changing my tune a little bit on this one. Still like the margins down here, but I think if we can get in and out of the market even sooner than that, that's only going to be good for us. So possibly looking for the short about there for a 1 to 2.72 and running with that one. So that's going to be your short. This is going to be your long up here. Let's just fine tune that one, get that one there. That's going to be a 1 to 2.68 approximately. And then this is going to be your no man's land in the middle. So that's actually really nice. I'm liking that. Download. Right, moving on. NAS 100. Up to the 15-minute time frame. Let's grab context. So we've got nice floor in the market in here. We've also got the highs up above, which are about there. Decent trading margin. 1 minute time frame. That'll look nice down there. And then we also have the break of structure here for a long. Or is that the long? Let's have a look on the 1 minute. These are going to be some seriously quick trades today. So you're going to have to be on the ball, team. On the ball. The short in between there and there is going to be done and dusted in the space of a candle. And I mean, you'd be looking at a pretty decent return on that one. So let's say, for example, around about a 1 to 2.5 to a 1 to 3. And then, of course, we've got the long. That's going to be a break of structure above that level in there. Entry, target, stop loss. And again, that's going to be around a 1 to 2.5 to 1 to 3 as well. And then this is the no man's land, I suppose. Now, it's already 2 o'clock, so you've only got a half an hour before the action kicks off today. So let's just hope that the market remains trading in its current range up until that point. Hey, Kelvin, good afternoon, buddy. So yeah, I'm liking the NAS 100 as well, but please be aware that you will have to have quick trigger fingers today in order to execute that one efficiently. I don't know with now having 4 trading options if it's a good idea to include the S&P, because it's just going to give more trades, and sometimes my personal experience, more is less. We've got the high, we've got the low down there. We don't have much of a trading margin until we run into a mega TRF at 677. I'm going to avoid the S&P today. We're just going to focus on US tech and the US 30 Dow. There's too much tech exposure in the S&P now anyway. So we'll give that one a miss for the afternoon. We'll stick with our guns, the US 30 Dow and the NAS 100, and we'll go from there. I think both of these look pretty good. Don't be afraid either. When I say let's try and get in and out of the market as quickly as possible, if we manage to get a 1 to 1.8 or a 1 to 2 in this short, the market then proceeds to trade lower down into this area in here, for example. Don't be afraid. If you're ready, you're willing, and you're there, you're at the market, you're being present. Don't be afraid to take another short at 47.023. You're still gonna, even if you lose that trade, you're still gonna have a 1 to 2 in the bag from above. So you're still gonna come out with a 0.25% win. Okay, so don't be afraid to put some more money on the wrist to double up. So that's what I would say about that, because that's a solid trading margin down there as well, and it's worth taking a punt on it, I would say, at the moment. For the long though, in the US 30 Dow Jones, don't do that. Okay, this is only relevant to shorts, not the longs, because we don't have the parameters there. The margins aren't available ultimately for the long. Don't like it. So shorts look good for a continuation. The long, let's just try and get in and out of the market for a 1 to 2 plus, and do whatever we can do, and we'll go from there. So that's pretty much it then for this afternoon session. Broken down the market report. We know where we stand for the week. Be aware, US government shutdown still playing a pivotal role in our markets. We may not see the CPI this week. We'll have to be watching that day to day, see if the data gets removed from the calendars like our NFP did, and really take that one from there. But are there any questions, ladies and gents? All good, Nadia? Good. Good to see you as well, Nadia. Thanks for joining us today. Kelvin, Trump giving away free money. Okay. Nothing's ever free with that man, mate. Nothing. Nothing is ever free with that man. Core Tim, you're all good. Matthew, you're all good. Excellent. I see we got Jack in the house and Scotty D as well. Good afternoon, guys. Hope you had a good weekend. Yep, cool. Okay, guys. Well, I'll wrap things up there then. So, hope you enjoyed the session today. For those of you out there on YouTube as well, pleasure having you on board. I hope all of you around the world have a fantastic trading week, and take care of yourselves out there. If you want to come and be part of the community and see what we're up to on a day-to-day basis, please feel free to do so. As I said, there's no strings attached to simply coming and checking us out. And yeah, let's go from there. So have a good day, guys. Look forward to catching up with you again this afternoon. See how the US markets go, and stay tuned for more on natural gas as our long-term long unfolds. So I'll see you then. Thanks, team. Bye-bye.